A lot of investors don't understand that cash is still used for roughly 15% of transactions in the US. There's no issue for us finding enough customers to use our Bitcoin ATMs, since there's still millions and millions of people that use cash for most of their everyday transactions. And because our business has higher margins, we don't need millions of users. We typically have a few 100,000 customers a year. And that's enough to be able to support a business like this that has over $60 million in trailing 12 months EBITDA and revenues in the hundreds of millions of dollars.
You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what. Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Brandon Mintz, welcome to the Mining Pod, sir. How you doing?
Good. How are you? Thanks for having me on.
Yeah, doing great, man. Thanks for joining. Kind of a detour from our normal coverage. This is a mining podcast. We've also done a lot of stuff with energy and AI and HPC infrastructure. We've touched on Bitcoin equities outside of mining, like some of the Treasury companies. But I think y'all fit right into this. I know that you have a burgeoning Treasury strategy. And also, it's just interesting, I think, to get a kind of a bird's eye view into this business with Bitcoin ATMs. It's not something that gets covered a lot, but people will be shocked, I think, to know or see when they're walking around their cities and their, wherever they live. These things are more common than most people realize, I think. And it's all often like a physical touchstone, I think, for people outside of Bitcoin. They're like, oh, I saw this Bitcoin ATM at the 7-Eleven. And so it's this kind of convergence of the cyber realm that we're all, enmeshed in week after week with Bitcoin and all the stuff going on Bitcoin Twitter versus what people on the street are actually interfacing with Bitcoin. So to kick it off, what made you want to start Bitcoin Depot? How did this journey begin? And what made you wake up one day and say, I'm going to get into the Bitcoin ATM business?
The journey kind of goes back to 2013. I was a student at the University of Georgia in my sophomore year and heard of a friend that had bought Bitcoin the year before and was already sitting at a crazy high return. I didn't know what Bitcoin was. And so I told this guy, hey, come over to my apartment. I want to learn more. He came over and I was enamored with the potential of Bitcoin and how it could change so many things within finance. And I decided to go buy some Bitcoin shortly after that. And I tried to use an online option. At the time, there was really only one in the US. And after 3 weeks of trying, I still didn't have my Bitcoin. I had trouble getting verified, trouble with customer support, trouble with orders canceling, and just watching the price shoot up during that time. And so I went back to this friend of a friend and I asked, hey, where can I buy Bitcoin? I still don't have any. It's been almost a month. He told me another way to buy with cash, where you deposit cash into some guy's bank account and he sends you Bitcoin in 15 minutes. It sounded very strange, and it sounded like I potentially, may not see that Bitcoin after I deposit the cash. But I tried it because I was really eager. I deposited $1,000 and I got my Bitcoin about 15 minutes later. So it worked. And I thought, there's so many people that are probably in my shoes that are not willing to go through this much effort. Why don't I make this product more accessible than it is today? And that's what I did throughout college. But ultimately, I wanted to do something that was a bit more scalable and automated than asking people to send me receipts after bank deposits and sending them Bitcoin. So I launched my first few Bitcoin ATMs in Atlanta in 2016. And that's when Bitcoin Depot was formed. And it quickly became a success. And there was a lot of demand for the product. So we ultimately expanded to 3 countries and have over 9,000 Bitcoin ATMs today across the US, Canada, and Australia. And we're evaluating entering 2 additional countries by the end of the year.
So that was pretty early days for this concept. Was Bitcoin Depot one of the first Bitcoin ATMs to launch in the US, to your knowledge?
We were not the first. I had been kind of playing around with Bitcoin ATMs on the side prior to launching Bitcoin Depot for maybe a year or 2 prior. And I know when I ultimately got one of those installed, Bitcoin Depot was at least one of the first few machines in Georgia. But I believe there were maybe around 200-300 at the time globally, with most of those in the US.
Got it. So y'all are coming off your Q2. You reported numbers last week, a week ago, as we're recording this on the 19th. So the press release from August 12th up in front of me. Quick fact sheet for some KPIs. Q2 revenue is up 6% year over year to 172.1 million. Net income for Q2 is up 183% year over year to 12.3 million. Gross profit 32% year over year increase to 30.9 million. And adjusted EBITDA for Q2 up 46% year over year to 18.5 million. What's driving this revenue growth that y'all saw last quarter? Is this simply Bitcoin's ripping, so people are using this more? I also noticed the press release said that the median transaction size increased, maybe indicative of people deciding to allocate a little bit more for a larger chunk. What's driving this revenue growth that y'all are seeing currently?
The revenue growth is driven by a multiple of things. One being we've been deploying additional kiosks quite a bit over the last year and a half. About a year and a half ago, at the beginning of 2024, we were just a little over 6,000 Bitcoin ATMs. Today, over 9,000. So somewhere around 3,000 machines deployed in the past year. Also, when we install one of our Bitcoin ATMs, it does not have its peak customer base immediately. We're doing a lot of marketing online to allow people to figure out where these machines are, and they ultimately go to the machine and use it. And so the machines that are less than a year old do not perform as well as the machines that are greater than a year old. So today we have somewhere around 3,300 of our Bitcoin ATMs are less than a year old. And so those have a lot of runway for growth because of the customer demand growing over time as people in that area who want to go buy Bitcoin realize it's there and go to use it. These machines are not in every store like cash ATMs are in gas stations and convenience stores and grocery stores. While we're in similar types of stores, there's only about 30,000 Bitcoin ATMs in the US today, while there's over 400,000 non-bank cash ATMs in the US today. If you added the bank ATMs, there would be a lot more. So it's still just scratching the surface, and there's a ton of runway for growth with us deploying additional machines in the US and into other countries. The revenue growth is also being driven a little bit now with M&A. So we acquired the assets of a small Bitcoin ATM operator in the Gulf South region of the US. And we believe that there is more potential for acquiring other operators in the space today as they struggle to have the resources to do what Bitcoin Depot is capable of in today's environment.
So I want to zoom in on something you said there. You said that newer ATMs typically net less revenue than ones that are older than a year or so. Is that just network effects isn't the right word, but maybe it is. Is that just once you install one, it takes a little while for people to realize it's there and for usage to pick up?
That's correct. It does take a little bit for people to find out about it over time. So if you compare Bitcoin ATM to a cash ATM, every convenience store in the country pretty much has a cash ATM. If they don't, they're about to get one and maybe they're just switching providers. If a cash ATM company were to come in and replace the existing cash ATM in a gas station, the usage will probably be at its peak because everyone already knows there's a cash ATM in the store. When we're deploying a Bitcoin ATM of ours into a store, 99% of the time, roughly, there has never been one in that store previously. So people are either walking past it as they're going into their local neighborhood store and they see it, or they're searching where to buy Bitcoin online, or maybe they're searching for Bitcoin Depot or where is the nearest Bitcoin ATM specifically. And then we'll show that address in the store and say, hey, here's one of our locations. We do that on our website. We do that on our mobile app as well, and a few other listing directory services. So it's just a matter of time where that customer demand builds up. And, a year or so after the machine is installed, most people in that area realize that the Bitcoin ATM is there. So our revenues have been growing from that consumer demand increase from the existing fleet that we had, prior to this year, but also the new machines that we've been installing very rapidly. We still have about 1,700 Bitcoin ATMs in our inventory that we plan to deploy as soon as we can.
Oh, interesting. So you have 1,700 waiting for deployment. That's pretty sizable considering the outstanding fleet. And just to give some context and zooming in on some stats that you just mentioned, this is from an article that we published in June from Second Gate Advisories, Brandon Bailey. Now Second Gate is a subsidiary of Nakamoto Holdings, or maybe they're just a part of Nakamoto. They were acquired recently. But anyway, Brandon wrote this article for us looking at Bitcoin ATMs and doing some pretty interesting comparisons to Bitcoin miners specifically. And I'll get to that a little bit later on in the discussion. He was looking at revenue and profit potential for an ATM versus, standard Bitcoin mining rigs. I believe he uses an S21 in this piece. But this is looking at crypto ATM installation growth. And as of 2025, there are nearly 40,000 of these machines in the US versus, 30,000 in the US. This is a global outlook from Coin ATM Radar. But you can see that in 2025, globally, there's about 40,000 and 30,000 in the US versus 520,000 traditional ATMs. So a lot of people doing double takes when they go into 7-Eleven, seeing this and not realizing that it's not a cash ATM, at least at first glance. When you're looking to deploy, let's say that 1,700 that you have waiting in the wings, what factors are you looking for in terms of the most ideal site to place these things? That could be everything from as granular as like the specific street corner you use or like what cities you're targeting. What's y'all's thought process when you're evaluating where's the best place to deploy a new ATM?
Going back to what you pointed out around the podcast you did with Brandon Bailey at Second Gate Advisory, I think he did an excellent job on the comparison of our Bitcoin ATMs to Bitcoin miners and showing how our machines are superior in almost every financial metric. But going to your question regarding where do we choose to install our machines, we're in areas that make up pretty much every type of demographic that you can imagine, since our customer base is pretty broad, considering we believe we have roughly three segments of the customer base based on what people are looking for when they purchase crypto or why they maybe need to use a Bitcoin ATM instead of online options. But going back to geography, we look at population density, competitors in the area. Those are some of the most primary factors. Of course, we also look at our own machines and where they're placed and previous sales data, and some other tools that we built internally that are proprietary. But we want to make sure that we have really wide coverage, but also at the same time, we don't want to deploy our machines in areas where there's already 20 Bitcoin ATMs, within a mile radius, because there's just maybe too much competition. So I think we definitely have a leg up over the competition in terms of our placement strategy and analysis, just because we have a lot of data over the years from now 9,000 plus machines, whereas others, they only have a few hundred Bitcoin ATMs. They don't really have enough data to strongly be able to say, hey, this location is going to be likely to perform or it's not.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
So I'm curious about when you're working with these convenience stores and partnering with them to install these machines, what does that partnership look like? Is there a rev share agreement? Are you usually just paying a kind of lease on that space in the store? How do you structure those deals specifically with the convenience store owners and wherever you place these?
Typically, even though it's a great benefit to the store of having a Bitcoin ATM in the store, since we're driving marketing, which drives customers ultimately to that store that may have not gone there otherwise, we still do provide either a flat payment or some sort of revenue sharing opportunities for the store. However, most are typically on a flat payment. Think of a couple $100s or so on average that they receive. And the store has no responsibilities whatsoever. We take care of all the customer support, the maintenance and repair, the cash pickup, the installation, etc. So the store is just basically providing us very small footprint of space, typically 4 square feet, 2 feet by 2 feet is all we need in the store. So it's very high revenue for the space that we take up in the store compared to other products where the store has to buy those products, hold the inventory for an unknown period of time, and then hope that they sell.
Has it become easier to convince convenience store owners to deploy these things? I'm just curious, you've been doing this since 2016. You're almost 10 years under your belt deploying these things. How has the appetite for a product like this shifted for those owners that you need to, lease space from?
Great question. I remember back when I was out there selling door to door in the early days of the business in 2016 and 2017. The first question would always be, what is Bitcoin? They couldn't wrap their head around what Bitcoin is, and they would get stuck on it. And then I realized instead of convincing them that Bitcoin is going to be widely used and paying them a revenue share or profit share on the machine, it became a little bit easier just to say, $200 a month, I'll pay you for this space. And then they stopped, getting so into the details on what Bitcoin is. But today it's different. It's easier because most people have at least heard of Bitcoin. And because we have so many machines already out there, we're a public company on the NASDAQ. We have 200 people. We have an excellent team that they can call if they ever have any questions or their customers have any questions. It's a lot easier. In fact, a lot of our locations today come from referrals from existing stores that are very happy with their products. And it's kind of cool that some of these retail location owners, get to say, I have a Bitcoin ATM in my store. It makes them seem more technologically advanced. We work with some of the largest retailers in the world, with Circle K being one of them, where we have still close to 1,000 machines. And this definitely gives retailers like that a leg up against their competition because they have a product that still a lot of large retailers don't have.
So I want to go back to this this article by Brandon really quickly, and I want to go to the chart just above this one. This one right here. Then this one kind of surprised me when I saw it at first. And crunching the numbers, Brandon found that the transaction volumes for Bitcoin Depot's ATMs, I think we could probably extrapolate this to the rest of the ATM market as well, but they don't really correlate with Bitcoin prices in as much as even when Bitcoin's dipping, people were still using these ATMs to buy and sell Bitcoin. And when it's ripping, even according to this chart, some of the transaction volumes are actually lower than we saw at the depths of the 2022 bear market. So could you just give us some more context on this? I mean, is it that simple? It's like people are using these things regardless of where Bitcoin's price is at. Like, is that revenue volatility really that low? And it's people are using these things regardless of Bitcoin's price action?
That's pretty much correct. And the revenue volatility is pretty low. We do have some seasonality in the business. For obvious reasons, people typically have less money to spend or invest around the holidays, and they have typically more money in their pocket once they get their tax return. Other than that, there is pretty low volatility, and we have not had historical correlation in any material way with the price of Bitcoin on our transaction volumes. And so we're one of maybe the only business, but one of the few that do not have this correlation with the price of cryptocurrency for businesses that allow customers to, buy crypto. And that's something really unique that investors should pay attention to, because the mining stocks, for example, or exchanges like Coinbase have a very high correlation with trading volumes or transaction volumes or Bitcoin mined or total value of the Bitcoin mined, depending on, I guess, the hype level of the Bitcoin market and Bitcoin prices. So we've been able to go slow and steady up and to the right for the most part since the company started because of that lack of correlation. So it's more of a picks and shovels way to play the Bitcoin industry without buying Bitcoin itself. You're really focused more on the infrastructure if you're investing in a company like Bitcoin Depot versus potentially just buying something that's a speculative asset that may go up or down, depending on many external factors.
Zooming into the picks and shovels comment, what's the biggest operating cost that y'all face? Is it acquiring new machines? Is it deploying them? Is it just the maintenance and upkeep, making sure that cash is being cycled? Where are the majority of those operating expenses?
Buying the machines is definitely a large upfront cost, but after you own the machines, the largest expense would be rent outside of payroll for all the employees that we employ today.
And you said that those rents, so would you say you typically do those renting models instead of the revenue sharing agreements? Like you were saying earlier, it's just easier to sell something like that if you're offering these guys cash up front each month. They don't have to worry about anything else.
That's right. Typically, it's a flat payment based model. But you can imagine, a couple $100 or so times 9,000 plus locations. You do the math on that. It's multiple millions of dollars a month and rent expense.
Yeah, 100%. Imagine it stacks up pretty quickly. So going to the customer profile here, who, to the best of your knowledge, like who's typically using these things to purchase Bitcoin? Like what's the kind of average buyer profile, would you say?
We kind of look at the buyer profile or the intent to purchase Bitcoin in three different categories. One being whether someone is unbanked, underbanked, which there is still many millions of people in the US, and it has been for quite some time. 15% of all cash transactions roughly in the US are still in cash today, believe it or not. And people do not have a way that I've seen to buy Bitcoin online directly with cash. If so, they may have to jump through multiple hoops. So for people in that category, Bitcoin ATMs are by far their best option. You can use cash and get in and out of a store in a couple of minutes with Bitcoin on the way to your wallet. Then we have people who may be less tech savvy, or they just prefer to do transactions in person. They are used to using ATMs or other types of kiosks, whether it's cash ATMs, kiosks at the airport, whatever. And they feel safer using something they're more familiar with in a store in their local neighborhood that they may go to all the time. Third, we have people who may just be investing or buying Bitcoin for some speculative reason, but they just want convenience. Maybe they can use the online options and they have used them, but maybe they hit their purchase limits, or maybe they're having some difficulty. There's still a ton of banks that block purchases from online exchanges, whether people are using their bank account doing a ACH debit, or they're trying to buy with their credit or debit card. So many banks out there block the transactions and people can't use the exchanges. So people in that category, may just want the convenience of being able to buy Bitcoin quickly without the hassle.
Typically, ATMs come with a price premium to spot Bitcoin on exchanges. I don't know what Bitcoin Depot's rates are, but I do know that's something I've noticed just looking at various ATM providers whenever I stumble upon them at a gas station or something. What's behind that premium?
Bitcoin ATMs are always going to have a premium over online options, just like other products that are similar. Whether someone is doing an in-person remittance or money transfer using cash to send that money and someone on the other end is picking up in cash, or whether they're using cash to receive foreign currency at a retail foreign currency exchange in the airport or somewhere else. Our spread that we charge is pretty in line with those services. In addition, it's just a lot more convenient. People are paying high fees on Uber Eats when they can just go out and pick up the food themselves. That's the world we live in. Everyone wants convenience, and they want to use services that save them time. So the cost of the service is very reflective of its value, and that's why people choose us over other options that may be less costly, and maybe they can still use them easily, but they still choose to use Bitcoin Depot for the value. And one of those values that we provide is live customer support. We have nearly a 50-person team that answers the phone, answers texts, chats, emails, typically responds within a couple of minutes, but over the phone, we're as fast as 15 seconds at times. Most of the other online options, it's hard to find even an email address or a live chat, let alone get someone on the phone. So we're a much friendlier experience, especially if someone's early on in their cryptocurrency journey.
I want to go back to Brandon's piece really quickly for one last chart. And this was the one that I was referencing earlier about revenue and net revenue per Bitcoin Depot ATM versus an S21EX or X21 XP. So we'll just look at the Q1 numbers here. If you're following on YouTube, you can see the chart on your screen. But in Q1 2025, Bitcoin Depot's ATMs were netting about $212 on average per day versus $14 for an S21 XP, and then $43 per day for net revenue, and for the ATM, and 11% for the S21 XP. So pretty huge gap there. I'm curious, when we look at this, it's apples to oranges in the sense that these are obviously completely different businesses, but at the bottom line, you have the revenue coming in, the money going out to cover that revenue. And one of Brandon's points in this piece is if you actually look at something like Bitcoin Depot versus some of these, major public miners, the multiples on the business are much lower in terms of actual net revenue versus the company's overall valuation. Just curious, following this thread, has it been difficult to pitch this business to investors? Do they ever lump you in with public Bitcoin miners or exchanges? How do you present the business in a way where you can show that you're differentiating it and maybe allay some fears that might come up from investors about, well, we see this from exchanges in terms of what they're worth, and here's what revenue they're bringing in. How do you kind of sell this pitch to people when you're saying, here's how we fit in the Bitcoin market?
I think investors are definitely looking at other public crypto companies and seeing a way higher premium on revenue, EBITDA, cash flow, et cetera, whatever metric they're looking at. And that allows them to see the potential of Bitcoin Depot. Because if we just reach, the average of what these other companies are trading for in terms of their multiples, that's a big jump up from where we're trading at today on the NASDAQ. I don't think they lump us into those categories. I think they know that Bitcoin ATMs are totally separate. At first, they don't realize that our transaction volumes have not been historically tied to the price of Bitcoin. They've been pretty steady other than the seasonality in the business that we have. And it's a business that allows them to reduce risk based on where the price of Bitcoin may go. We're in 2025 right now based on the 4-year cycle. Who knows what 2026 holds? But we could be approaching a top in the terms of the Bitcoin price somewhere in the next few months. Nobody knows. I could be wrong. But if I were an investor looking at public crypto companies, I would say, well, there's a lot of risk in potentially buying a mining stock or buying Coinbase or other exchange stocks right now, because they may be close to the top in terms of their transaction volumes. A lot of investors don't understand that cash is still used for roughly 15% of transactions in the US, and that there's no issue for us finding enough customers to use our Bitcoin ATMs, since there's still millions and millions of people that use cash for most of their everyday transactions. And because our business has higher margins, we don't need millions of users. We typically have a few 100,000 customers a year. And that's enough to be able to support a business like this that has over $60 million in trailing 12 months EBITDA and revenues in the hundreds of millions of dollars.
So let's talk about expansion. I got a few more questions and we'll wrap up. You mentioned that you're evaluating 2 other countries to deploy to. Can you name those countries, or in an elusive way, explain what countries would best fit the profile for expansion for y'all?
We haven't named those countries yet. We look at a few factors: Bitcoin adoption, population density, cash usage, regulation as well. And a combination of those allows us to kind of figure out where we should go. 90+% of all Bitcoin ATMs are in the US, Australia, and Canada. So most of the other international markets are untapped.
Would you consider breaking into Europe? I know there's some Bitcoin ATM usage there, especially like in Eastern Europe, but I'm just curious if that's on your radar.
We definitely would be interested in breaking into Europe. There's a newer license requirement that gives you access to pretty much the entire EU with one license that we would have to get. We could also look at buying a company that has it or partnering with a company that has it. So it's definitely on our radar.
The big question on everyone's minds is, what's the Bitcoin Treasury strategy? Now, y'all are in a good position, I would imagine, to establish something like this in terms of being more public about it. What are Bitcoin Depot's Bitcoin Treasury aspirations? Is this something that y'all are actively looking at as a marketable aspect of the business in terms of selling the stock to people? What's your strategy with attacking this?
There's a couple different strategies out there. One being the very popular MicroStrategy one, and a lot of others have adopted the same strategy where you raise money by selling shares into the market from your own company and acquire debt to build a Bitcoin treasury, and you likely don't have an operating business. For us, that's not the case. We have not gone out and got additional debt or used proceeds from selling shares into the market necessarily to buy Bitcoin. We've been able to support our Bitcoin purchases, which is more of an investment now that we've acquired Bitcoin from opportunistically when the price is lower than 100,000 primarily. And we've been able to do that from part of our cash flows from the business, and only a small part of our cash flows from the business has taken us up to 100 Bitcoin. So there's a lot more potential for us to grow that treasury if we wanted to by using a larger percentage of our cash flows without having to tap into the debt market or dilute existing shareholders. For us right now, we're not sure exactly how big our treasury plans are. We're really focused on evaluating other opportunities such as building additional products and looking at acquiring some other businesses potentially. So we just want to differentiate ourselves in that we're not diluting shareholders or using debt to fund these purchases. And that kind of keeps us untied to this extreme correlation with the Bitcoin price, like a lot of other crypto stocks have.
Yeah, it seems like we're getting to the point where maybe not now, but in the future, investors will probably be a little more judicious with differentiating between cash flow companies versus like pure play Bitcoin treasury strategies. Because like when Strategy came out with it, formerly MicroStrategy in 2020, they were the first to do it. Now we have all of these copycats, and I just wonder, sitting here as someone who follows these news items all day, it's like, is there actually enough capital out there willing to chase this strategy across 10, 12, 15, 20 different companies, right? If I were looking at a company building a treasury strategy, I would rather them do something like the Bitcoin Depot approach, where they're taking cash flows and they're not having to dilute or take on debt, issue converts in order to accumulate that. And I wonder at what point do we reach like peak euphoria with the pure play Bitcoin treasuries, and then some of that investor froth kind of spills out into the companies that are building cash flows with their base business to do that instead of having to play financial engineering games. But
that's a great point, because if, for example, the Bitcoin price does decline quite drastically the next few months or next year, I think that euphoria will go away and people will look at what other public companies that are in crypto that they can buy that are safer in terms of less volatility with the price of crypto. And we hope and we think a lot of that demand for public equities in the crypto space could spill over to us in the next downturn.
Yeah, that makes sense. All right. I want to close on regulatory tailwinds or headwinds. I'm just curious to get your input on how you feel the regulatory environment changing with regards to Bitcoin companies, and if the recent change of guard with generally a more pro-crypto Congress, more pro-crypto regulators in various positions within the federal government, and whether the White House specifically being pretty all in on crypto, if that's been helpful for reducing some of the red tape to expand, or if it's business as usual.
I think it's definitely been helpful on a federal level and driving Bitcoin adoption. And Bitcoin Depot will benefit from that adoption. The more people that are interested in crypto, then there's more people that will buy it. And that's where we come into play. So we're very excited about those tailwinds from the new administration being so pro-crypto. And it's allowed a lot more companies in the crypto space to look at going public, which further increases demand and visibility for a company like Bitcoin Depot listed on the NASDAQ, one of the most major public exchanges in the world.
Yeah, hopefully train keeps rolling. It's been nice to see the turnaround. This is really kind of a complete 180 from the last 4 years, so at least from where I'm standing. Well, Brandon, any closing thoughts before we wrap up the show?
Nothing too much, just very excited about the path forward. We have a lot of machines left to deploy. We're looking at international markets, like I said. We're evaluating M&A opportunities, and we're excited to see what the next few months and years have in store for Bitcoin and public crypto companies like us.
Hopefully we can keep the bull run lasting just a little bit longer here. We're dipping down to 112 as we record this. Anyway, that does it for us today. Thank you so much for joining, Brandon. And for all our listeners, y'all have a good week.
Thanks so much for having me on.